Alright, hello guys, glad to have you on board again. Today we're going to look at our intraday charts. There is plenty of things to discuss this time around as a lot of volatility have emerged. But once again, you might not want to pay attention to this. Remember that when we're doing intraday sessions, you might get bombarded by all the informations around and all these people telling you the market moves for this reason or that reason. You should never ever pay attention to this. Neither do you when you actually swing in long-term trading, but that's a topic for another day. In the meantime, though, remember those information must be set aside. Don't listen to them. Only look at what you see on the charts and apply the risk limitations you have based on those signals only. Nevertheless, you might have seen that the market has been volatile, but for the S&P 500, we have nothing suggesting we should pay attention to it, as we see no volatility alert so far. If you had one, you would be definitely concerned and say, okay, I need to account for this potential volatility in the risk limitation. That would mean potentially extending stop losses further, making sure that your stops are below or beyond Bollinger Bands and all sorts of stuff like that. But we have nothing to suggest this is the way to trade. So for very simple reasons, I'm not going crazily like, everything is uncertain, though I need to double my stop loss sizes or whatever. I have no information suggesting such a thing. So I am applying the strategy as is, despite the fact that there are clearly some impacting news flows that have moved the market since then. Anyway, so remember that the background structure in here is that we have a flow sequencing. I'm just moving one time from higher. It's been first flow, second flow, and the third and final flow, which has been moving pretty wildly. Remember, we've had lots of volatility alerts in this area telling us that the third range boundary that may follow suit would be dangerous to trade. It would be a perfect profit-taking area for those who traded this third flow, but certainly not an area to sell, as it would probably be too dangerous to do so. The answer of this and the outcome has been pretty much straightforward, exactly that, meaning we've gone higher, keep pursuing with the same old top 7 names leading the pack and the rest of the market creating huge divergences. So remember that, to me, the top of the market was in April. This was just a stupid speculative extension caused and fueled by over-speculation from a handful of small traders in stupid narratives, creating very dangerous patterns. Anyway, the flow, to me, terminated back then, and as we stated, we can't be bull anymore. Anything that happened now is a swing reversal for those who traded on the high time frame. Only thing that we do in terms of flow sequencing is waiting for 2 consecutive bearish flows. And we're going to need those 2 before we even try to think about bullish again. So we can't be bull. Remember what we said? That means there's only one option for us. Selling or doing nothing. Doing nothing is one viable option, and that's the one we should be into now. So remember, I told you don't try to catch the markets up. But that doesn't mean the market will give you a third range boundary. And that's exactly what happened. Remember that I told you the market could go very well in a straight line down. It could reverse because the market top, for those who were bullish, the profit-taking area was there. And you should have gotten out of there by that time. Now the rest is just a stupid extension, which we mentioned is something you need to stay aside. You need to just look and say, okay, I'm not part of this, and I'm going to wait for the reversal to happen. Now the reversal happened. It's been a delayed third range boundary. Remember, we go from context to context, we break a trend line, and we go at least to 50% context, and then we break the previous low point, and the context gets reversed at a later stage. So we definitely have made the third range boundary already. It's there. So what we're doing now is not a third range boundary. That's the 5th. So remember that when you're trading here, you certainly can trade the third range boundary patterns, okay? The only thing you do now, if you absolutely want to trade this thing, is to put your fibs and to trade the DOM range. Remember that you have more than 4 range boundaries, which means the only applicable strategy so far is, so long as you stick in between those range boundaries, put your goddamn fibs and trade whenever you go outside the context at minimum 76% retracement. So to me, that means we had a nice range boundary there, and I definitely have traded it. So I'm in it. Stop is pretty wide, looking at the size of the trend channel. So stop loss is somewhere around 5,700. And that's basically the way it is. I don't care too much about it. All I know is that this is a dumb fucking range, and I don't pay too much attention to it. So now two things are going to happen. Either the market is going to go over my stop loss, or it's going to go into the mid part of the range where profit taking is mandatory for me. Pure and simple. Am I targeting new lows, whatever shit like that? No, I'm just selling the top of the range, targeting the mid, and we'll see what happens next. It's really how it goes. Don't make it overcomplicated. Apply the goddamn patterns. Don't try to think it through. Now, for the flow traders, remember that what we want is a first bearish flow. Remember that if you really want to trade it, because it could definitely be arguably traded. If you want to trade it, then you know one thing. You know that it's not going to be easy to figure out the target because there's no such a thing. There's no targets to be defined on the flow sequencing. It's just these flows will last for how long as they want, and their amplitude can vary greatly as well. So there's no way for you to know anything, but one thing is that this flow sequence will reach its maturity as long as the bearish resistant context is falling below a flat or bearish moving average. So for now on, the moving average is rising. For now on, the resistant context is above it. So, Jesus, there is no way the first flow is mature enough now. So, if we're into it, and if this is the market top, then there's plenty more consolidation to go. And that's all we know. You know that if you want to trade this first bearish flow, then you want to retain bearish exposition to this market for longer. Because there's only when we'll get to those elements, technical elements, visibly on the charts that I would be saying, okay, we have at least started to consolidate enough. For now on, we haven't. So it's really how it is. I'm going to wait until this context reverses, falls below the moving average that needs to be flat or bearish. And that's all I care about. The rest to me is noise, people trying to forecast the future, where personally all I'm doing is selling the top of the range, taking profit in the mid, not extending any further than that. Okay? It's really how it is for me. Dumb trading for now on until we either get a new all-time high or we start the first consecutive bearish flow, which means after the first one terminates, God knows where the target will be. All I care about is so long as the context doesn't fall below the moving average, there's no such a thing as a first flow. When it happens, well, it would consolidate. To where? I don't know. How long? I don't care. All I know is that once it terminates, I will sell the second consecutive bearish flow, as it would be an easy trade to make. So that's all there is. Remember, if you're trying to catch the market top or forecast the markets when you're actually doing these kinds of intraday trades, you really don't get the point, okay? Is there a dumb range opportunity? Absolutely yes. The moving average is inside the context. We already have 3 range boundaries, so you're at the 5th. So the only thing you can do now is dumb strategy. So don't tell me this is a 3rd range boundary, though the target is there or there. No, it's just blind, dumb, simple. Make it easy on you guys. You have all the elements to trade a dumb trade. Go for it. You know where the target is, and you know it must be stupid. Don't overthink things. Don't listen to the news flows. Don't listen to anyone else. Just trade dumbly. All right. So that's for the S&P 500. So we have both a dumb range strategy active right now with a nice bear trade, which I personally taken. If you want to, that's only your own deal. Remember that in here you have no volatility alerts whatsoever, so you just apply the goddamn strategy. Put a stop loss that is approximately the size of the trend channel, which is pretty damn wide now. Okay, so that's all there is. Wait for the first flow to mature, and if we have it, then that's the sign that the market has entered corrective stage, which we want. And otherwise, it goes all-time highs and back to all-time highs, baby. Keep riding that stupid thing, which you can't be part of. Remember, it can extend longer than you'll be solvent, but you must not be bullish in the market anymore. So only one option, be bear or do nothing. So if it goes higher, do nothing. If it goes lower, be bear, period. It's really simple. Okay, now for the commodities. So WTI, remember, we're pretty likely in a weekly show in here. Possibly could be a daily. It's hard to figure out which one of the two it is. But if it's daily, then the Bollinger Band is right below our feet at 68. So there's marginally lower opportunities for the WTI. So be very cautious with that one. Also remember that the dollar is losing strength quite a lot. So seeing WTI going lower is kind of worrisome. That means WTI is really taking taking a hard hit as both the asset itself and the dollar denominated is deflated in the same time. So really having some kind of weird energy going down here. If that's the weekly, that is the time frame, which I think is arguably more rational, well, then you would say we still lack of a third range boundary, so we should be going somewhere around like 100 and plus to get to meet this resistant context. And for now on, we have consistently held above the moving average, which seems pretty rational to me. Also remember one thing, that's if we have to squeeze, because that's one last possibility, which I haven't mentioned so far, is to say if we squeeze out the momentum in here and the prices, sorry, not the momentum, the prices, remember if you see the channel in here getting dark gray, that's also the sign that the range is mature. That means even if we don't have a third range boundary, we don't care about it. It could very well flush away through this area. But we need an extended and very long range accumulation to consider such a thing, okay? And to me, that will still mean I would risk manage the possibility of a third range boundary anyway. So for WTI, nothing too fancy, just once again the same old manipulations of prices, which arguably could be discussed. But remember, that's none of our business here. We look at what the chart tells us. The chart tells us we have mature range signaling in this area. Very much looks like this accumulation is keep on going, and we're still trading across this moving average. And frankly speaking, the Bollinger Band is at 30 bucks. I don't even think for a second that we're going to get down there. So that's the way it is now. I'm bullish on WTI, waiting for this flow to trigger itself, and so far it's been a long pain trade, nothing more than that. Silver has been yet another pain trade on this moving average, but finally managed to trigger despite all odds, and the fact that market makers didn't want you to make money on this trade, they were forced to succeed, to let it happen. So the second flow is now activated. God knows how long and how far it will go. All you know is that we're far off into getting to profit take, because the reason is the maturity stage is, as we stated last time around, the moving average is still rising and above the support context, which means the support context needs to cross it above. So there are reasons to believe prices will move faster than their history, which means I expect silver prices to increase in the distance. Despite market makers not wanting to, it will happen because that's what the technicals tells us. We don't know anything about the future. All I know is that once again I look at the charts and I don't pay attention to anything else. I don't see volatility alerts or any other reason to alter the risk limitation, which means all these bullish trades are all at break even now. If the market makers want to take them out, they need to retrace down to 22, which I think they don't stand a chance to achieve. So on the other hand, go higher to my profit takings, which I've nothing, which I don't see for now. So we'll see at a later date. Until then, silver, bullish, patience, stop break even. You don't risk anything anymore. Let yourself ride that thing. Okay, cryptos now. Bitcoin, very simply, remember the way it was. In the daily chart in here, we had two flows. We were looking for the third one. We're a 4-hour chart reference. Though remember that I told you I took this trade eyes closed in here on the Bollinger Band because that was the plan to start off the third flow. We had that night rebounds, but remember, you don't overexcite yourself until you break $73,000. We've gone pretty high, and remember I told you on the weekly briefing there are things suggesting, yeah, you might not make it this time. So we had lots fucking of volatility alert back then telling me, yeah, I think that's too straightforward for a story. Could be volatile, and that's exactly what happened. So lots of volatility in Bitcoin, going right back down in here, but as you can see, it's just a dumb volatility move. I still think we're locked into this momentum in which sooner or later we'll find the strength to go 73K, which will trigger the third flow. How long, how far, you don't know anything about it. Just let yourself ride that thing so long as the 4-hour chart doesn't reverse. Same thing goes for Ethereum, but in a much more stupid way. Because as you can see, this big boy had no such a thing as volatility alerts. There are no alerts, but we had one in here. Same thing, the entry was in here on the Bollinger Band. I took this trade eyes closed. And if you think of it that way, I think most people have used something like that for their stop losses, which means their stop losses were probably around this support, and boy, some of you guys have been taken down. Who's been responsible for this is not the business. We actually know what happened. It's been massive liquidation on the aftermath of stupid weekend sales from these very well-renowned kind of actor in the space, Jump Capital. So remember, I told you these guys are motherfuckers, and they're going to die. They're going to be liquidated, and well, I just think the beginning of it is starting to surface. So we'll see more of it, but remember, once again, none of your business. All these kinds of information should not be processed in intraday trading. So you had the volatility alert. If your stops were still there, this alert should have told you, oh boys, move it further if you can. If you've been stopped by their liquidation event, well, I think taking back that trade is the best thing to do. Like, you've been stopped, too bad. It was very harsh and violent. If you couldn't react because you were doing something else or whatever, I think re-entering that trade is the thing to do now. Ethereum would be triggering his third and final flow, and as you would see, this one needs to be triggered right up at 4,000, which means we've retraced down to 2,000. This thing will have to 2x before triggering the third flow. The reason why I think it is still the best trade in town. And I'm going to argue that it isn't. There are some others who can offer much better risk rewards now, mentioning Atom among others. Because remember, Atom has been making this massive Wyckoff spring, which we knew was a possibility, which means we now have gone down to the monthly context, which means 4-hour sequencing has restarted. Making new lows means we're going to get a set of 3 flows, and I goddamn believe it's going to happen. So remember that to get a first flow, you're going to wait until the support context crosses above a flat or slightly rising moving average. So I have reasons to believe the Atom prices will rise. As remember, I think the channel will go like that. Until this happened, because for now it's just speculative, I think just buy the fucking thing. I mean, it's just so cheap. It's just incredibly fucking cheap. I can't even believe we're trading below $5. It's just crazily fucking stupid. It's free money out there. Nearly, I mean, at least, arguably you could buy into something that could go to zero. Everything can, but Jesus fuck, Cosmos Hub isn't going to zero. But that's the way it goes. So first flow, if you're too risk averse, then let it happen. Don't try to buy the first flow. Remember, it's too tough. That means buying a bottom. So let it play out. Wait until you have confirmation and evidence that this moving average has flattened and that the support context managed to cross it above. Once you have that, let it build a third range boundary. Okay, so that means prices will third range boundary, sorry. So that means prices will build a third range boundary where you profit take if you have done this trade. And afterwards, you know that for anyone else, any pullback to this moving average is going to be the opportunity to buy the second flow. The second opportunity would eventually be on the Bollinger Band. But remember, moving average and Bollinger Band will be two very nice entries for these kinds of trades, which I will absolutely take myself. Second flow triggers when we break the previous all-time high or the previous market top, and you know the drill. Okay, so that's the way to go. I think Atom will pull out a 3-flow sequence, and we are actually building the bottom, which means the first one is to come. And it's of course very speculative, so you have to figure out the market bottom if you want to trade the first flow. Once the maturity is reached out to, take your profits and sequence the second flow afterwards, and so on. If you're too risk averse, don't trade the first flow. It's the most dangerous one to catch because it requires buying a bottom. Another one that has been triggering some interesting maturity is AVE, because AVE has already made its first flow here. It was very violent. Consolidation, whoo boy, that was something. And now we have retraced back to the moving average. And as you can see, this moving average is now being paid. Same thing goes in here. Remember that the monthly chart is viable in here. We've touched the context. So this is where you can 4-hour flow sequence, okay? So remember the way it goes. In here, we've gone higher. First flow, very violent stuff. In here, we had the opportunity, attempt to second flow. It was goddamn fucking violent, which means we've retraced down to this level, try to take down some stop losses. And I think, well, boy, this is just like a very violent first flow, hell a lot of volatility. But I think now the second flow is going to trigger out of the Bollinger Band. Okay, so remember the moving average might have been somewhat like violently traded. I think this is more like a mistake, like the market attempted in here and rejected, back to the Bollinger Band, just stupid volatility. I think the second flow is going to trigger afterwards. So the story in here is that there's a bit of noise through this flow, but I think the first flow is there. The second is starting off from the Bollinger Band, and the second flow validates when we finally break 150 this time around. I think we're getting close to it, and I think it's going to happen. So AVE, second flow. Atom, first flow down the pipeline. Here, speculative of course, but god damn it, at $5, that's a free play. That's all it goes. And I think on the other hand, Bitcoin and Ethereum are trading their third and final flow. So be very cautious with that. I've seen many people saying crypto will go up only for everyone or down only and everything will crash down. I have reasons to believe there's no such a thing down the line. There's so many different situations for intraday traders to deal with. Some are very immature flow sequencing where they're just getting started. Some other are trading second, more intermediate flow sequencing. Some are pretty late stage already. And yet people think that everything up, everything down is the future. I disagree entirely. I think it's a stock pick opportunity in the crypto market as well. Take some specific names which provide nice risk limitation and clear and clean charting. For the rest, I don't care. Much of this is bullshit. And if you're trying to flow sequencing on meme coins, I don't know what you're doing. There's no such a thing as a flow sequence on meme coin. There's no monthly range visibly traded out there. The number of assets that truly have monthly bottoms and monthly range opportunities now are very limited. And there are not that many of them. Atom is one example, AVE is another, and we've scrolled down through it. Link is also another player, but there are not that many of them actually out there who provide very low risk strategy. So that's all there is. Be rational. Once again, look at your charts. Don't try to overthink things. The charts tell the story more than thousands of words. And they're not range tradable opportunities in all of these assets. Most of them are just stupid pump and dumps with no intrinsic value. And if you look at the charts, they'll tell you this exact same story. That being said, I'm going to leave you guys with that. See you later.